1. Master the fundamentals of stock market success. Although strategy is important, it's not as critical as knowledge and the discipline to apply and adhere to your rules. Fundamentals are key. To achieve super performance in the stock market, focus on mastering the basics rather than seeking complex strategies. This includes understanding market trends, identifying strong companies, and developing a disciplined approach to trading. Key fundamentals include trend analysis, earnings and revenue growth, industry group strength, relative price strength, volume analysis. By consistently applying these fundamentals, you can increase your chances of success and avoid common pitfalls that plague many investors. Remember, even the most successful traders rely on a strong foundation of basic principles to guide their decisions. 2. Identify and invest in market leaders for super performance. The best stocks make their lows first. Spot emerging leaders. Market leaders are often the first stocks to recover after a market correction and can provide significant returns. These companies typically have strong earnings and revenue growth, leading their industry or creating new markets, breaking out to new highs before the general market, attracting institutional investment. By focusing on these leading stocks, you position yourself to capitalize on the most powerful trends in the market. Remember that many of the biggest winners may be unfamiliar names at first, so be open to researching and investing in companies that are not yet household names but show strong potential for growth. 3. Use specific entry point analysis, SEPA, to time your trades. The SEPA approach, which I will explain in detail, allows me to find those elite candidates that have the potential to become super performers. Precision in timing. SEPA combines fundamental and technical analysis to identify the optimal entry points for trades. This methodology helps investors pinpoint stocks with the highest probability of success and the lowest risk. Key elements of SEPA: trend analysis, fundamental strength, catalysts for growth, proper entry points, effective exit strategies. By using SEPA, you can significantly improve your timing and increase the odds of catching big moves in stocks. This approach helps eliminate emotional decision-making and provides a systematic way to evaluate potential investments. 4. Focus on earnings growth, not just valuation metrics. More times than not, the expensive market leader is actually cheap, and the laggard is really the more expensive choice. Prioritize growth. While traditional valuation metrics like P/E ratios are important, they can be misleading when evaluating high-growth companies. Instead, focus on earnings growth and the potential for future expansion. Key factors to consider: earnings acceleration, revenue growth, expanding profit margins, industry growth potential, market share gains. By prioritizing companies with strong and accelerating earnings growth, you position yourself to benefit from the most dynamic and potentially profitable stocks in the market. Remember that stocks with seemingly high valuations can often be justified by their superior growth prospects and market opportunities. 5. Utilize technical analysis to confirm fundamental strength. A picture is worth $1,000,000. Charts tell a story. Technical analysis provides valuable insights into supply and demand dynamics and can help confirm the strength of a stock's fundamental story. By combining fundamental and technical analysis, you can make more informed investment decisions. Key technical factors to consider: trend direction and strength, volume patterns, chart patterns such as cup with handle or volatility contraction, support and resistance levels, and relative strength compared to the market and industry peers. Using technical analysis alongside fundamental research allows you to time your entries and exits more effectively, potentially increasing your overall returns and reducing risk. Remember that the most powerful setups often occur when strong fundamentals align with bullish technical patterns. 6. Implement strict risk management and loss-cutting strategies. If you fail to prepare, you are preparing to fail. Protect your capital. Effective risk management is crucial for long-term success in the stock market. This involves setting clear stop-loss levels, managing position sizes, and having a plan for various market scenarios. Key risk management strategies: set a maximum stop-loss percentage, for example 7 to 8% below purchase price, Use trailing stops to protect profits. Diversify across multiple positions and sectors. Have a plan for unexpected events such as earnings surprises or market crashes. Regularly review and adjust your portfolio. By implementing strict risk management protocols, you can protect your capital during inevitable market downturns and position yourself to capitalize on new opportunities. Remember that preserving capital is just as important as generating returns for long-term success. 7. Develop the mindset and discipline of a successful trader. Trading can be an intellectual stimulation as well as a way to make money. Played well, it demands skills of the highest order, and skills the trader must work very hard to acquire. Cultivate mental toughness. Successful trading requires more than just knowledge. It demands emotional discipline and a commitment to continuous improvement. Developing the right mindset is crucial for navigating the ups and downs of the market. Key mental attributes to develop: patience to wait for the best opportunities, discipline to follow your trading plan, objectivity to analyze your performance, resilience to bounce back from losses, continuous learning and adaptation. By focusing on personal growth and maintaining a disciplined approach, you can overcome the psychological challenges that derail many traders. Remember that success in the stock market is a journey of self-discovery as much as it is about financial gain. Embrace the process of learning and improving, and you'll be better equipped to achieve long-term success.